Good morning, Cheryl. Yeah, I think real estate sector is very closely linked to the interest rate cycle, and I think you're right in saying that EMIs would definitely get a bit expensive. My sense is, Cheryl, that in the very near term, demand continues to be extremely robust. We have been talking to a lot of real estate builders like Lodha, DLF, smaller players in NCR like Anantraj. Demand is extremely strong, and I think registrations continue to be very rock solid. My sense is that at least for the next 2 to 3 quarters, pockets like Mumbai, pockets like Delhi, NCR, Gurgaon, I think would see a lot of demand coming in. A lot of inventory which was lying earlier has got eased out. So I think despite the interest rate hike, I think this kind of market, if it gives an opportunity, I would be more positive on larger players like a DLF or a Godrej Properties, even smaller players like Anantraj. Clearly, I think for the Mumbai market, it would be Lodha and Oberoi Realty. So I think one can obviously take a slightly longer term view here, because I don't think the real estate market is going to show any signs of weakness, at least in the near term. Plus, the kind of focus on affordable housing and expectations that in the budget, we could get some better announcements for infrastructure housing. That is definitely going to keep the real estate stocks buzzing for some more time. I think, Cheryl, one thing is very clear, that I think one needs to regularly put some profits in the market, because I think typically what retail investors do is they don't sell at the right time. So I think booking profits regularly for some part of the portfolio is also equally important, because that increases your margin of safety and obviously allows you to deploy cash in some new investments. So I think profit booking is also extremely important as buying stocks, and I think trying to give some time to their investments. I think in this market we have seen that stock prices have been very volatile, so I think this is a good time to accumulate quality businesses at good prices, and I think keep the horizon a longer term kind of perspective, because I'm quite confident that coming year we should see better levels for the market, for the index, and overall corporate earnings growth. The management commentaries have been very solid, so I think it's a buy on decline market, but with a long term horizon, and obviously keeping in mind that regular profit booking actually adds to the cash flows also.
One is Bikaji and the other one is Global Health. Avinash, in both of these counters, we have seen good gains even post-listing. And Subrata already has these shares at a lower price levels. Good time to accumulate, or one should wait by?
So I think as far as Bikaji is concerned, the company reported its Q2 numbers, very strong operating numbers, both on the operational EBITDA as well as the bottom line. I would believe that Bikaji Foods has a very long runway to grow, so continue to hold on. And as far as global healthcare is concerned, hospitals are back in flavor. Finding that specialty hospitals are normally getting better valuations in the market, and I think the trajectory for earnings would continue to grow for the next couple of years. So I think both these stocks keep a time frame of at least 1 to 1.5 years, and I think one can expect a very decent risk reward even from the current levels. My guess is, PSU banking has seen a very dramatic and sharp rise. So I think at these levels, I think he should look at the larger banks like a Bank of Baroda or maybe a Canara Bank. I would be quite confident the fact that the second half is also going to be equally strong. In fact, with interest rates now going up, the yields are definitely going to improve for most of the banks. And Bank of Baroda has shown a very strong, loan book growth. Asset qualities have also come down. So Bank of Baroda seems to be quite well positioned, and even Canara Bank, which is a large bank in the PSU space. So both these banks he could accumulate, but take a time frame of at least 8 to 12 months. My sense is banking, should do very well at least for the next 3 to 4 quarters. And with a credit growth of almost 18-19%, there are good times to continue for the PSU banks going forward. See, I think, from a longer term perspective, Fred and Pharma definitely looks interesting. I think my sense is, if the investor has a time horizon of at least 12 to 18 months, then I think he can definitely continue to hold on. We have seen a very strong kind of growth and a positive commentary from the management. But since it's a slightly illiquid stock, I would suggest the investor to take a slightly medium to long term view, because volatility in the stock price is quite common where the liquidity is very limited. So one can hold on, but definitely, I think from a longer term perspective, in the near term, we will not see any major kind of upside coming in the counter. If the view is slightly longer term, in the sense the next 12 to 15 months, if the investor can hold on, I believe 5G rollout is also going to play a positive impact on Tech Mahindra, because they have solid vertical strength in the telecom vertical. And plus they have a large order book, and my sense is that most of the negatives are captured into the price currently. Possibly from the first half of 23, Europe and US, there are some visible signs of some sort of growth coming back again, would definitely play a very good positive rub-off on the stock. So my sense is I think the investor needs to give a little bit of more time here, considering the fact that the headwinds still continue to be challenging, but business longer term is definitely looking solid. So I think he can average, but keep a time frame of at least 12 to 15 months, and then obviously he could expect a better risk reward. I think Shrishti, for most of the oil marketing companies, softening crude prices is a good sign, considering the fact that a lower crude price actually benefits them in generating a better gross refining margin. So I think if the investor can hold on for the next 6 months, my sense is that unlike the first half where most of the refining companies made losses, the second half could be a lot better. Obviously, December quarter may be a little challenging, but January to March quarter, I would believe that GRMs could improve, the profitability could come back, and I think as crude prices settles down, obviously the throughput from sectors like aviation, automobiles would obviously give them a big volume push. So continue to hold on, but keep a time frame of at least 6 to 12 months. My guess is, Srishti, cement is going to be a very strong sector in the next 6 to 8 months. We have been talking to a lot of cement companies, and cement prices have risen. More importantly, infrastructure spending on the ground has started moving up, and the coming budget is also going to give a big boost to infrastructure manufacturing, which in tail would obviously benefit cement players. So coming to Prism Johnson, I would believe that if the investor has a 6 to 8 months kind of time frame, I think 3 months is too short, but definitely there's a lot of flavor in low priced cement counters, especially where capacities are available and where geographically prices have started moving up. So I would believe that one could expect at least a 15 to 20% upside over the next 6 to 8 months. So I think if he has the share, he should hold on. I think don't make the mistake of exiting early. Cement could be a surprise outperformer in the next, say, 6 to 12 months. Biologics opportunity is a very large opportunity for Biocon, and I think in the very near term, while the stock may not move up, I think there's a significant scope for some value unlocking for Biocon, because the management has clearly hinted that they could be looking at value unlocking opportunities here. Additionally, the company's subsidiary Syngene has been doing very well in the contract research space. So my sense is that the stock may have not moved up, but I think if you have a little more patience, definitely earnings numbers are bound to show up in FY24. FY23 second half is also going to be a lot better. So I would believe that continue to hold on. Keep a time frame of at least 12-18 months, because this is a slow mover in the pharma space, but definitely tailwinds appear to be positive. So I would prefer to hold and keep a time frame of 12 to 18 months. I think, Shrishti, Bajaj Finance is one of those multi-baggers which has generated a huge wealth for its shareholders and investors. But I think recent news flows about Reliance company Jio Financial Services entering the domestic markets has created a little doubt in the minds of investors as whether competition will heat up. My sense is that Bajaj Finance will still continue to enjoy very strong profit margins, and obviously with the kind of AUM and the kind of asset quality and the loan book growth delivered by the company, the road ahead is going to be quite positive. I think over the next couple of years, if the investor has a timeline, then he can stay invested. I think he can even average at the current level, considering the fact that financials are going to play a very big role after the banking sector in the growth in the Indian economy. So I think financials would be very much in demand, and I think within that Bajaj Finance would obviously outperform. But keeping a time frame of at least 1 to 2 years is essential, because near term, there are no triggers which could actually re-rate that stock in the very near term.
Okay, the next question coming in from Hemant, and Avinash. Hemant is holding Bajaj Finserv. The average price is 1750, sitting at a loss, but he wants to know the growth prospects for the company for the next 2 to 3 years. What's your view on that?
I think Bajaj Finserv is the holding company for Bajaj Finance, and it also has a significant interest in the general and life insurance business. So I think over the next 2 to 3 years, the insurance business is going to unlock a lot of value. The government is also very keen to promote the insurance sector, and we could see some announcements in the coming budget. As far as the consumer financing business, NBFC business is concerned, that is Bajaj Finance. As I mentioned earlier, the year you got to keep a view for at least the next 2 years, because business continues to grow rapidly. The stock is underperforming because there are concerns that Jio Financial could, obviously disrupt the financial services market early next year. But I think it's better to wait and watch. Bajaj Finance is a significantly large player, and I think growth would continue. So for the time being, my sense is, rather than selling in panic, I would believe that, Bajaj Finserv should be held on. A lot of value can be generated over the next 2 years. So please hold.
All right, actually, we have to slip into rapid fire. But before that, let me try and squeeze this one fundamental query, because Soumitra has reminded me that he's asked a funda query. And this one is for you, Avinash. He's saying that with the RBI policy hawkish and the impact of growth being visible with the downgrade, that what he's mentioning is that RBI today has actually revised the GDP growth rate downwards to 6.8 versus 7% earlier. And he's saying multiple companies have invested in capex already. Can this mean that these companies are headed for a painful period in the coming year?
No, I think one should understand that corporate capex has now taken off after a period of almost 8 to 10 years, Cheryl. So I think companies are now pretty confident on incremental demand coming ahead, and I think corporate capex is never done with a short-term view. It's always done with a time frame of at least the next 2 to 3 years. So I think companies which are actually investing for growth are interesting bets, because that is where the market looks at for growth numbers, especially on the top line, profitability, on the earnings growth. So I think you should not be bothered about the macro numbers. Focus on specific companies where the capacity and the incremental earnings growth would drive earnings. So, this is something which I think investors should understand. Don't relate the GDP number with the corporate capex number, which has got absolutely no, near-term kind of correlation.